Our penultimate panel, for the numbers guys in the room, penultimate means second to last. So, you're welcome for that. Our penultimate panel of today deals with a very timely topic, public-private partnerships. And the panel is going to be moderated by the esteemed Chlora Lindley-Myers, who is the NAIC's most recent past president, as well as being the director of the Missouri Department of Commerce and Insurance. Our panelists are going to be Hendrickx, who is the head of Prudential Policy Insurance from the National Bank of Belgium. And we have Raghuveer Vinukollu, head of Climate Insights and Advisory at Munich Re. Come on up, right? So we can say nice things about you as you're coming up. As well as Amy Chester, who is the managing director of Rebuild by Design. So with that, I'm going to turn it over to the esteemed Chlora Lindley-Myers.
Thank you so much. Good afternoon. I am pleased to be moderating this panel. It's on the public-private partnership, it's called PPP, and I'm just so pleased to be joined by this lineup of people, and I look forward to our conversation. To set the stage, we're seeing more and more attention being placed on public-private partnerships, and rightfully so. According to a white paper published by the World Economic Forum, insured losses from natural disasters reached a 10-year high of $42 billion in the first 6 months of 2021. Coupled with climate protection gaps, the increase in natural disasters poses a detriment to the insurance industry. Investing in nature, however, allows us to mitigate future environmental catastrophes, but it also generates trillions in additional business opportunities and millions of jobs. The industry can also start to close the insurance gap, which is what we're looking for, through educating the individuals, businesses, and communities with the climate risk they face and the economic buffers and resilience that insurance provides. As we rebuild communities after a disaster, we need to think about resiliency as well as risk reduction. So I want to start the conversation, and I will go probably to you, Dieter. I'm going to ask you, what is your idea? What are your thoughts on public-private partnerships?
Well, I mean, to start with, it's all in the word, that public-private partnership. It's about thinking on how to distribute losses related to, in this case, natural catastrophes in between the private sector on the one hand and the public sector on the other hand, which may seem a very obvious idea at the start, but once you get into the nitty-gritty details, and maybe I can come back later to that based on our Belgian experience, you see that there are quite some challenges, not only linked to the discussion on how to best distribute these losses, but also, as you said, on how to include aspects such as education, such as risk awareness, how to make people aware of the importance of risk prevention, etc. So all these discussions come together when you try to set up a PPP, and I'm sure we'll discuss all those details later on.
Absolutely. I'll go to you next, Amy.
So thank you for having me here today. I'll just give you a little background on Rebuild by Design. Rebuild by Design is a nonprofit that was started by President Obama's Hurricane Sandy Task Force over 10 years ago, and we're located in NYU in New York City. And we work on public-private partnerships all the time, but we think about it very, very different because to us, the private sector is also community members. It's community members, it is architects and designers and engineers that are going to be creating the large-scale infrastructure. And we have a model where we bring together the best experts of the world and connect them with local governments and local communities to both design and actually advocate for and fund large-scale infrastructure. And we've done that all around the world, including over $8.5 billion of climate infrastructure in New York, New Jersey, and Connecticut. And we've done that the entire program with people that don't normally work together.
Raghuveer?
Thank you, Director. So really glad to be here and being joined by all of you. And I work for a company called Munich Re. It's a reinsurance company, global reinsurance company. And when I think about public-private partnerships, I try to go back to the fundamentals of insurance and what we think about, whether it's explicitly or implicitly, we think about this every day, which is risk as a function of hazard, vulnerability, and exposure, right? So when we think about that three parts, I like to say that, especially since we have the title as climate resilience, we have defined the weather and the climate of the next 20, 25 years. No matter what we do in terms of the emissions, that's not going to change, right? So that's defined, whether it's only going to get worse in certain areas as compared to the others. So is hazard in our control? No. And then we talk about exposure. Exposure is something that constantly changes, depends on the regions, right? I mean, one example to think about is after the pandemic, there was a lot of movement of people from regions like California and New York and all those to more the south part, Texas, Florida. So exposure significantly went up in some of these regions. Is that something which is in our control? Probably not, right? Mm-hmm. So now the question is vulnerability. Is that in our control? And that answer is absolutely, right? So we can change how our buildings and infrastructure will react to the climate of the future and also of the present, right? So from that standpoint, when we talk about a public-private partnership and think about risk as a holistic view, then we need to work with these communities to understand, okay, what's the vulnerability and how do we address that and how do we minimize the impact of these events on the vulnerability. So, and what we can then do as we manage that risk through the help of the communities, through the partnerships, we can put a proper risk transfer, something like that's from a reinsurance industry and the insurance industry standpoint. We can put more tailor-made solutions that the communities require. So that's how I envision and think of our P3s.
Thank you. Dieter, I'm going to ask you, is Belgium considering any approaches to developing and expanding the PPPs there? And if so, can you give us some idea of what those initiatives are?
I'll try to. So you have to know, in Belgium we have PPPs regarding terrorism losses, but also natural catastrophe losses. So I'll focus on the last one. I'll try to give you a little bit the good, the bad, and the ugly, because we've had some challenges with our system. We have some strengths, and to be very honest, discussions are still ongoing. So we are not at the end of the story. Our system exists since early 2000s, but based on recent experiences, so we had very severe floods caused by heavy rainfall in the summer of 2021 in the south of Belgium. Some of the elements of our system were put into question. And it's effectively those elements that get you at the core of the discussion of how to set up a sound and future-proof PPP, and that have illustrated to us all the challenges that you have to overcome when you try to set up. So allow me to try to explain it. Normally, I draw pictures when I have to explain this, but I have to ask you to bear with me. I'll try to explain everything in words. So the basis of our system is mutualization of risk. So everyone who has a fire insurance policy in Belgium is covered for natural catastrophe losses. Small caveat, we talk about simple risks. So the large industrial risks do not fall under this rule. As we have quite a good penetration rate in terms of fire insurance in Belgium, mainly explained by the fact that if you want a mortgage loan in Belgium, banks will ask you to have a fire insurance. So depending on which survey you want to believe, we have 85 to 90% of people soundly covered by fire insurance, and as such also for natural catastrophes, as they are de facto included within the fire insurance policy. So this allows us to mutualize the risk. So it's independent on where you live, whether you live next to the river or far away from the river. For instance, your flood risk is covered. Next to that, it may still happen that some people do not find insurance because it's too expensive, for instance, and for that we have created a sort of solidarity pool, also financed by the insurance companies, where people who are unable to get a private insurance solution are able, via that solidarity pool, to still get a quote and get fire insurance, including the natural catastrophe losses as well. Within that system, we have a first layer covered by insurance and reinsurance companies until a limit, and then the regional disaster funds kick in. So that's the public part of the system. That limit is actually one of the items which has been discussed. So based on recent flood experience, we have seen that the limit, which was defined back in the early 2000s, is a little bit low. To illustrate you, so the recent floods which we had in 2021 were 5 times the losses than foreseen by this limit. So everyone got immediately the feeling that this current limit that we had was not up to the challenge. And then you open up a discussion on what would be an appropriate limit. For the 2021 floods, our government asked the insurance companies to show some goodwill and to cover above the legally foreseen limits, which they did. But this can only be considered as a one-time solution because it also created a lot of uncertainty. And uncertainty triggered questions on which insurance and reinsurance capacity would be available on our market, because no insurer or reinsurance likes that amount of uncertainty within the system. So after long discussions, we were able to fix a new limit, which is 4 times higher than what we had before. And in this discussion, for instance, the National Bank of Belgium was involved together with insurers, together with the governments, together with the policyholders, to try to figure out what would be a reasonable limit for the private sector to cover the first losses and then the public sector to come in. A second item which is heavily debated is how to finance the public part of the system. So we discovered as well that we didn't have it fully pre-financed. And then when you have large losses, as we had in 2021, everyone came to the devastating conclusion that when it's not adequately pre-financed, suddenly somebody has to pay something which they didn't foresee. If you add to that the notion that these heavy rainfalls, at least to people who know much more about it than me, are predicted now to occur much more frequently than what we have seen in the past, you know that the discussion on how to finance the public part of the system is a real relevant discussion to have. There, the National Bank of Belgium emphasizes that this, for instance, could be done by a tax on the premiums. But this discussion is still ongoing. So you see, we've had a sound structure, but we needed to make that structure more future-proof. And despite the fact that the losses have occurred in 2021, I can tell you still today the discussions are ongoing to illustrate to you how difficult it sometimes is to get a good compromise on all these elements. On that, I have to add one more element. Which types of natural catastrophe losses you want to have covered by the system? So far, we've had earthquake, you've had flood, you have windstorm, which is a little bit separate. But we needed to add drought to that. usually people start looking at me very strangely, saying, well, you have been complaining about floods for the last few hours, and now suddenly you talk about droughts. Well, the reality is that we see that droughts have caused, due to the fact that a lot of buildings in Belgium are built on clay ground, a lot of cracks in houses. And these long periods of droughts, which we have experienced also in Belgium, have caused a lot of damages and opened up a new discussion on how to cover these types of losses. So you would need a system that covers all types of losses. And in a new reality where long periods of droughts are exchanged with periods of heavy rainfall, you really have this combination of losses due to droughts with losses due to heavy rainfalls. And all of this comes together in a very interesting discussion, but a very difficult one, because it hits at the core at how do you want to solve this societal issue, and how do you want to distribute the losses between everyone involved. So I hope it's more or less clear.
Thank you. Amy, can you sort of give us an idea about Rebuild by Design, the solutions that you've looked at, and how they apply not only in New York City, but elsewhere?
Absolutely. So Rebuild by Design does our work in 3 ways. One is large-scale regional design competitions, which we had after Hurricane Sandy, and also in the Bay Area. That's where we bring experts to really work with communities and try and solve these challenges from the infrastructure side. The second is through processes where a state or a local government, sometimes a foundation, will come to us and ask to help solve something, and we create a public-private partnership with stakeholders and actually design and do it together. And then the third is on research and policy, and we've done quite a bit on research and policy that has led to some really great implementable things for our communities. One of the things that we've done recently is we released an Atlas of Disaster, and the Atlas of Disaster goes literally state by state, county by county, and counts how many climate disasters, federal climate disasters, that county experienced between 2011 and 2021. And this comes from a report that we did in New York State, where we were able to show our governor that 100% of counties had disaster declaration. For, in that case, it was during his tenure. So this is Governor Cuomo during his 9 years. And we were able to propose, what are you going to do about it? It's your responsibility. It's happening on your watch. Climate change is here. And we proposed both a insurance surcharge at that time and a bond act. And we kind of pursued both of them at the same time. And eventually the governor decided to do a bond act. And because of that, New York has $4.2 billion of climate infrastructure dollars that are being implemented right now. So we took those learnings and then we applied it to the Atlas of Disaster and did it nationwide. And what we found is that 90% of US counties had a climate disaster between 2011 and 2021. 90%. So for 90% of communities, climate change is already here. And we also modeled an insurance surcharge actually for all of the 50 states. And we found that just a modest 2% surcharge on certain types of property and casualty insurance. So if you back out medical compensation, workers' compensation and medical malpractice, you have generally, kind of property pool to work from. And if you apply a 2% surcharge on that, and you bond it over 10 years, in 10 years, the US could have another $287 billion for climate infrastructure. In a place like New York, which insurance is very expensive, car insurance, house insurance, all different types of insurance, very expensive in New York. It's an average of $2 per policy holder per month. And we like it because it's progressive, because lower income people don't have insurance or might have a little bit of insurance. But it's essentially a wealth charge, because if you have multiple houses or a boat, then you have more insurance. So people who have more wealth would put more into that pool. And we proposed this, and we've gotten, a big kind of stop sign from the insurance industry. And the insurance industry, basically, one of the things that we argue is that it can help lower everybody's insurance. And the insurance industry actually called us liars, and we realize it's because the insurance industry isn't actually writing flood insurance. It's not that we realize that, but we realize that they didn't really understand flood insurance, because that is our federal government. FEMA writes that. But FEMA has a really great program called the Community Rating System, where if you create infrastructure community-wide, and it doesn't only have to be physical infrastructure, it could be changes to building codes. If you make the entire community more resilient, everybody's policies go down. So if we were to raise these dollars and use them in a very smart way, everybody's policy would go down. The other thing that we heard from the insurance industry is, just a hard no of we don't want to use our product that we have such a cost-sensitive environment that we don't want to use our product to even, help in the tiniest bit of $2 a month. It was just completely off the table. And I really feel that we have lots of problems. We've been talking about it all day. I'm sure that everybody saw the New York Times article yesterday, and we've been thinking about this for a long time. But we have to be part of the solution. Everybody in this room has to be part of the solution, and we're the only ones that are going to figure this out. So I think we need to kind of let go with the things that we thought didn't work before and start thinking about, okay, let's just stop saying no to things. Let's try and start saying yes and figure out how we climb out of the mess that we're currently in.
Thank you. All right, I'm going to sort of move it over to a different area. In 2003, the IAIS report titled A Call to Action, the Role of Insurance Supervisors in Addressing Natural Disaster Protection Gaps. It noted that it was important to understand the necessity and the viability of PPPs. What makes a partnership viable and necessary? Raghuveer.
Sure, thank you. I think that the best way I would put that is by maybe giving an example or two. So I think the protection gap is something that needs to be highlighted almost for a lot of perils, but particularly for the peril of flood. And I think Director, you've given some numbers, but the one thing that we were talking earlier, but right, that I do work over the Mississippi River, and when I say I, Munich, we do work with the Mississippi River mayors. There's about 104 mayors in the cities and towns that collectively think about how the issues that they're facing on the river. And the one number that I, as a hydrologist, I also found was the 2019 floods, right? And that we all remember that flooding because it was one of the historical events in terms of how many communities got impacted, but more importantly, how a pandemic was followed by after that flood event. So there were a lot of communities that took a long time to recover. But that event highlighted the protection gap much more significantly than any other event. And that was $25 billion or more of economic losses. This is the NOAA number, right? Mm-hmm. And out of that, about $200 million was insured. So we talk about less than 1% insured values, right? So there's a lot of course, there's a lot of crop insurance, but when we look at property insurance as well, this was not different than what we have noticed with the National Flood Insurance Program, right? And which we are a strong supporter of it as Munich Re. And that's the public-private partnership I will be mentioning about. But I think the flood insurance, and as you said, Amy, it's not covered so much by the private market, although the private market, and especially the reinsurance industry, has been pushing for a private market solution, which is much more flexible, much more broader in options rather than just a one-size-fits-all, which is really required from the NFIP standpoint to people who live in these high-risk zones. But we have, as an industry, provided solutions which offer more broader solutions in terms of covering for low and moderate risk so that the premium is not as high. In fact, there are products available that can be, as a homeowner's endorsement, these products are available for $30 to $50 for a limit of $10,000, right? That's as an endorsement. And But then what we as an industry were constantly working towards is, let me take a step back again. In terms of the NFIP, also want to mention that number has also, in terms of the number of policies that are insured by the NFIP, it's really high in states like Florida, Louisiana, California to some extent. But when we go to states in the Midwest and the rest of the country, it's less than 5% in most cases. But even if we take that as an overall country, we're about 5 to 6% take-up rate of flood insurance. Now, that, in terms of absolute numbers, the NFIP number of policies is about 4.7 million, right? And that means only 4.7, and add a few more hundreds of thousands of private market policies, but we're not crossing 6 million policyholders in the entire United States, which has more than 126 million homes. We're really talking about a very huge protection gap. So in terms of a public-private partnership that the industry, as a reinsurance industry, we pushed for, and this was kind of around the same time when I joined the industry back in 2011, we were talking about how events like Hurricane Katrina and Hurricane Ike and Superstorm Sandy started putting a lot more pressure on the NFIP program. And so we were kind of collaborating with the federal government, with FEMA, was how can they leverage a reinsurance program as a public-private partnership to kind of move some of that risk to the private market. And so since 2017, there was the National Flood Insurance Program reinsurance partnership that has been in place, and Munich Re has been since inception a partner for the NFIP reinsurance program. And the benefit of that program was showcased in year one, and that's because what happened in 2017 was Hurricane Harvey, and that was a full limit loss for the industry, right? But at the same time, that was I think the number was $1 billion of limit was moved into the reinsurance industry or the insurance industry, and the FEMA, the federal government and NFIP got $1 billion from the private market, right? So year one, there was a loss. So it was a full limit loss, right? And that has now, the program has only increased in its limits, but it showcased how the industry can bring its capital to the best use when these kind of events happen. So the viability of those products was really clearly demonstrated. The other thing I wanted to say is in terms of how we think about some of the challenges that we see, but more importantly, what we try to address is one thing you will keep hearing from me is always about risk mitigation. And that is really, really core to some of the work that we do and in terms of a public-private partnership. Because we really want to make sure that the risk is managed so that we provide a sustainable insurance solution. So it's not like the risk is increasing over time. Now, I agree with you, Dieter, that I would love a board here so that we can put some graphs here. But if I explain the risk in terms of how we have seen extreme events increasing, what's happening is the risk is increasing, as I mentioned about the hazard exposure and vulnerability. Traditionally, if you think about the events like hurricanes or severe convective storms, how the industry has solved for these issues in terms of how to manage the affordability, but as well as trying to provide a good solution, is to say how are the deductibles and limits in line with the underlying risk, right? So that we would put it as risk retention, right? How much are the homeowners or the property owners going to be able to retain the risk with insurance still providing a good value to it. So again, affordable, but at the same time provides a good value after a disaster. But then Hurricane Andrew, and then there was really for wind and hurricane, that's when the deductibles increased to 5%. Severe convective storms after 2010 to 2012, that's when the industry started putting higher percentage deductibles for. But over time, we cannot, with the risk that is increasing with disasters like the 2017 and 2018 wildfires, I mean, that's another number that we work with in the industry. The 2 years of wildfires wiped out the total profit of the industry over a 25-year period in the state of California, right? So can we increase the deductibles and solve the problem? No. Risk retention cannot be increased any further because then it's not providing the value. So what we have to start doing is, again, back to that, the only way to address this risk, which is more of a feedback loop, if we manage the risk, then we can address the affordability. If we don't manage the risk, then the underlying risk is going up, so the premiums will go up. But there is another option to address that, and that's risk mitigation. So it's not risk retention, that's been done. Now it's risk mitigation and the risk management. And so that's what we would like to work on with these public-private partnerships. And over the last 3 to 5 years, at least in my role, what we have been doing is we've been working with the communities, with the chief resilience officers of these communities, and saying, what are the infrastructure changes that you're thinking about, right? Is it building a flood wall? Is it restoring the marshlands and so on? Then we are actually able to quantify the benefits and kind of showcase what's the insurability of the regions that are getting impacted. So these are all the ways we're trying to work with the local communities. But again, I really want to emphasize the solution to the problem that we are facing in terms of the risk is risk mitigation. We need to manage the risk.
Amy, I'm going to come to you on that same issue as far as how do you balance the risk mitigation versus risk transfer, at least with Rebuild by Design?
I mean, I think we realize that risk transfer doesn't work, and we need to mitigate as much as we possibly can. And that looks like a lot of things, and some of that looks like moving from places that we can't be anymore. And I have friends that lost homes during Hurricane Sandy. I have family who lost a lot during that storm as well. And most people went back to living the same exact place, the same exact way that they did before. So my aunt and uncle's house that's on Rockaway, it was flooded. They lost 2 cars. Her mother down the block was flooded too. And then the only thing that changed is on the ground floor, they put down tile instead of carpet. Exactly, and there's a generator in the back, but it's also on the ground floor in the back, but at least they have a generator now. And I'm not making fun of them, I'm just really saying that that's what the human nature is. You want to go back to feeling like you are as secure as you were the day before the storm. And that's not a reality, and what we're seeing across governments is that governments are understanding that now, and yes, there are chief resilience officers, there are more plans on that, and they're also talking about retreat, and we're actually working with both New York City and New York State on this program. And I don't think that's the answer to, probably 99% of the locations, but it is the answer to some of the locations. For the other 99%, I really believe that we need to do community infrastructure on that community scale. So it's not about the house to house and whether or not that house is going to flood. Because if your house doesn't flood, but you're stuck inside, then you can't get out, and emergency services can't get to you. So for instance, in New York, they've just cited, I think it's 1,500 units in Rockaway, an area that is a peninsula that has flooded over and over again, even on sunny days, because it's higher than the other area around it. But you're creating these islands of protection, which are actually probably one of the worst things that we want to do, which is to give people that fake sense of protection. So we really need to take a step back and get everyone at the table and start talking about what are the ways that we can enhance the community. This is a once in a lifetime, more than a lifetime opportunity where we get to take a step back and say, wow, I get to rethink my community for my kids and my grandkids right now. And we could do it in a way that brings us parks and brings us social infrastructure and gets us to know our neighbors better at the same time that we mitigate that risk.
Can I add a little bit there, Director?
Well, I want to get to
Sure.
Dieter. I get to Dieter, and I'm just going to ask him, basically about educating through a PPP that, all the stakeholders, so that, again, they're not going back to the same place that they were before and putting down tile instead of carpet.
Yeah.
And so you can kind of, give us your idea on that and how it is or isn't working in Belgium.
I will probably repeat some of the things which have been said. First of all, we have to recognize that the PPP brings a unique opportunity of bringing together all parties involved, policyholders, insurers, supervisors, and the government. And you can use this opportunity, or this opportunity is often used, and we see that in Belgium as well, to discuss about how to distribute certain losses. I think more emphasis could be put on the educational aspect, on the risk prevention aspect. And all of the parties involved can play an important role here. Allow me to give 2 examples. Insurers have the ability to demonstrate to their policyholders how certain risk prevention measures could help them or even drive down the premiums so as to create sort of a win-win situation. To give a very basic example, if you have fire insurance and you have a fire alarm in your house, we know fire alarms save lives. And we have seen some insurers in Belgium who stimulate the use of fire alarm by giving a reduction on the premium when you buy fire insurance. Another example, and I think this links to what was mentioned before, governments play a hugely important role in explaining where do you want to live, what is the importance of building codes, what is the consequence of living next to a river other than having probably a very beautiful view every morning. And to create the infrastructure. And here I have a very nice example of what the Flemish government did in Belgium. So the Flemish government is the government representing the northern part, the Dutch-speaking part in Belgium. They recently introduced what they called the Blue Deal. So that has a link with the Green Deal, but the Blue Deal represents how do we want as a society to cope with water. And it boils down to some very basic questions. So far, if you look at Belgium, and especially the northern part, there's too much concrete. So what happens? Rain falls down, gets driven as fast as possible to the river, and from the river to the sea. That all works very well until you have very heavy rainfall, and the rivers are not able to swallow anymore the heavy rainfall. So thinking about how could our infrastructure help us to avoid these type of losses is a discussion which you should have prior to the discussion on how to distribute the losses whenever they occur. And for instance, as part of the Blue Deal, one of the key things that are being reinvestigated now in Belgium is how to make better use of natural floodplains. So as to make sure that if the river overflows, it does that in those areas that are naturally capable of absorbing water and avoid the river overflowing in densely populated areas with a lot of houses. But it requires a complete rethinking on the infrastructure, and it's a very long-term project, of course. You have to also convince people, for instance, when I was renovating my own house, one of the messages that I got recently is instead of having a fully concrete driveway to my garage, maybe there's an idea to have it in a soil that absorbs water in a pleasant way. To have a well that helps to absorb water and also helps to overcome the periods of large droughts. So it's an all-encompassing solution, and PPPs offer the opportunity to also have that type of discussion.
Can I make a comment?
Okay, then we'll go back to
Please do.
I think that I think that PPPs mean different things to different people, and it's not one thing. So I think we should try and talk about what type of PPPs, or like who needs to be at the table, who are the stakeholders that need to be there, and then what is each person doing? Because there's a lot of talk about, oh, this is a public-private partnership, but really the onus ends up being on the government and the government's pocketbook without really discussing, okay, what does a partnership mean between two parties?
I totally agree there. And I think Deirdre kind of mentioned and alluded to with some of the stuff I was trying to say. And to your point also, Amy, that the public-private partnership has different aspects of it too, right? Even within what I call it as the risk transfer continuum, right? And there's three aspects of it to get to the risk transfer, which is risk assessment or communication of the risk, which you were mentioning. And if people don't even know their risk, and again, I do not mean that insurance premium should be the way to communicate the risk. It should be, what is the flood risk of my home? And again, it should not be a binary thing. It's not like you're in the flood zone or you're out of the flood zone. It should be, there is a certain risk score associated so that people can understand their risk and make the decisions accordingly. So that's number one. Then comes risk mitigation or management, right? Now, this can happen at the homeowner level, property owner level, or at the community level. And that's when you get to the risk transfer, right? Because again, I think, Amy, you mentioned this earlier, that insurance is not supposed to be something that you get a payout for every small event. It's supposed to be, by definition, for an unforeseen event. And if we have the risk changing, where we are seeing that frequency event, which is the smaller events that happen every year or every other year, then that's not insurance. In a way, it's trading dollars. So, those are the events that actually increase the premium. It's really the frequency events. And so we really need to remove that uncertainty, and that's where risk mitigation plays a significant role, is removing that losses from those events so that people don't, again, it also impacts people, because if they're suffering from a disaster every other year, then it's not just about a financial resiliency. It's also about how does a community recover from that. And one example I like to give is, I think this is Hamburg, Iowa. Director, you would probably know. There is a lot of flooding that happened. And if there is a community that gets impacted by flooding often, then don't just think about the homeowners or the property owners only. Think about that one grocery store which is in that town. Now, does that grocery store feel that they are actually profitable? And what happens if they pull out of that town? That becomes an impact on the entire community. So those are the types of thought process, and I agree with you, Amy. We really need to understand, where does public-private partnership fit? Is it on the risk communication side, or is it at the risk management side, or is it at the risk transfer side?
And I do think that, we're looking at this and talking about public-private partnerships and what does that all mean. It does mean the education. It does mean the stakeholders are brought to the table. But what do you see, and I'll start with you and then come back down, the role of the insurance supervisor in that particular realm? Yeah.
No, I think, and I'll highlight some of the work which we have done in the state of Missouri, Director. So the L536 is one of the levee segment which got impacted after the 2019 floods. And when the Army Corps rebuilt that, the Nature Conservancy went to them and said, well, what about we think about a levee setback? And a levee setback is nothing but, as Deirdre mentioned, right, we really need to expand the way the river can flow if we have a levee in place. So we're not going to confine the river. We don't control nature. Nature controls us, right? So that was a really amazing decision taken, where they pushed the levee and a levee setback was created. The impact of that decision was showcased where we kind of took 1,500 homes around the river on those zip codes, And we said, okay, what's the impact of that decision on the insurability of these homes? And what we found was, as a community, if all these 1,500 homes took a community insurance or public-private partnership solution for a risk transfer, right now the NFIP premium for those homes would be around $1,000, and we could quantify that at $315 per home. So it was almost like a 65% decrease. Now there's two factors over there. One is the risk mitigation itself. But then there is also a take-up rate and treating insurance also as a community rather than individual homes, right? It's not, I know it may feel like it's mandatory, but it's not really the mandatory aspect. We're saying that the impact of a community taking insurance together, where you reduce the uncertainty that you were mentioning earlier, and so the insurability increases even further. So there are solutions, the community insurance solutions, which we as an industry have been, again, talking with the chief resilience officers and so on. These will create that perfect balance between that risk retention that I mentioned about and the risk mitigation. And so that, because now the risk mitigation is done by the city itself, can there be a risk transfer solution that can help the community basically recover from an event and be resilient? And these new solutions will be somewhere where the insurance commissioners and supervisors would make a huge difference if we can come together and put these solutions so that it can help the communities.
Amy, your thoughts?
Yeah, so first, just a thought on risk communication. I'm glad that you brought that up, because it's become in vogue for states to pass legislation that is requiring flood disclosure. We have it in New York, we have it in New Jersey. I think it just came into effect in March in New York City. However, the way that the legislation is worded, it's that at time of sale, that's when you find out. So how many people have been through a mortgage? Anybody? What that's like, getting a mortgage? Yeah, it's really horrible, actually. It takes a long time. It's really stressful. And at the end, you're so excited that you got to that moment, and then they give you a stack of papers, and then you just sign it all. They say, this is telling you this is telling you this disclosure, this is saying there's lead in your apartment, this is saying it's flooded, this is, and you're like, okay. You're not going to back out of that transaction at that point. It's too late. So even the things that we're calling solutions aren't actually solutions. They're just ways of us saying that we're fixing the problem without actually doing it. But what I think is that the insurance commissioners are in this really interesting place. A lot of the commissioners are elected, some others are appointed, which means that you either have the backing of your governor or you have backing of the people. And between the two of them, you should be able to think about your office as one that advocates for people not to suffer. You know, we talk about how many disasters there have been to prove the point that people are suffering. We shouldn't be talking about what we're going to do after people suffer. We need to be talking about what we're doing before people suffer. And if we stop thinking about insurance, as you're talking about, as being this thing that's kind of revolving that we're going to use all the time, and more of like, you know, we shouldn't even get to the point of a payout of insurance. Let's think more strategically what we're doing at the Department of Housing, Department of Transportation, Department of Environmental Protection, and come together and actually solve this problem.
Dieter?
Well, I think you've mentioned the IS note earlier, so I think it summarizes very well the different roles supervisors could play in this story. I think based on our own experience, we have been advising the government on and the old and the new PPP system in Belgium, and we basically help them out in terms of measuring the protection gap, trying to establish a reasonable limit for the PPP in terms of taking into account the insurance and reinsurance capacity on the Belgian market, as well as the amount of losses that could be borne potentially also by the public part of the PPP. There are additional roles supervisors could play in terms of financial literacy, risk prevention, making everybody risk aware, highlighting the importance insurance could play in covering losses. And I think bringing all these roles together would already be a huge challenge for supervisors. I'm sure of that. But there is a role to play, I'm sure.
There are some questions that were presented. One of them is, do you think increasing social pressure will spur more innovation in this space? Amy?
Well, it's a loaded question. Social pressure on who? Social pressure on politicians, social pressure on CEOs. There's a lot of social pressure to go around, but it's kind of sad because the social pressure doesn't really come after the event again. We don't have this huge movement. The environmental movement, for instance, is really focused on mitigation. And even you were talking about green jobs and blue jobs. Our green jobs legislation on the federal government is solely focused on energy. It's not focused on sewer infrastructure and the type of things that I'm advocating for. So we need to actually be building that social pressure because I don't even feel like it really exists.
I think I like to say I agree, but to some point, I think it comes back to more than social pressure. It's again back to the point of education. I think that's really the key. And it's not just an education about the risk itself. It's an education about how the system is going to pay for this if we do not do something about it. So I think that education is also critical because how does the Stafford Act how is it working? It was put together and it has substantial benefits, but is it really addressing the climate of the future? So these are some questions that we need to ask, but at the same time, be able to educate.
There's another question. The C-suite panel talked about people needing to pay appropriate rates when they build in risky areas. How can we make sure that this type of building is not being incentivized? Dieter?
Well, as I mentioned before, I think here governments can play a role in terms of building codes of where to build, where not to build, what are the consequences if you build in certain areas. And it also links with what I mentioned at the very beginning of when I tried to explain the PPP system in Belgium. We do have quite, luckily I would say, a very high penetration rate in terms of fire insurance and as a consequence of people covered for natural catastrophe losses. But there is still a percentage of the population which is either unwilling or unable to find that fire insurance. And there, our solidarity pool does play a role. And people do get a price and are able to have fire insurance. Now, the question is, to which extent this price is really risk-based. And, that's a question I think you have to solve as a society, where to which extent do we want to accept certain places being built, and what would be the consequences in terms of bearing losses in case a flood does occur, and who has to pay in that case?
Amy, your thoughts?
I agree. I think, that I feel like in this case, we need to actually, I wish we did have the board, because we need to go through who all are the stakeholders and literally go one by one and talk about what are the roles that they can play and how we can use economic pressure, social pressure, and government leads to start figuring out where are the solutions in this.
Raghuveer?
Again, I forgot the question. I think this was a C-suite question, correct?
Yeah,
and we're not incentivizing.
Yeah, not
right?
incentivizing,
right.
exactly.
Sorry, so a lot of things going on in my mind. So I would say, I have talked to people who, in Florida and Texas that have said that their premiums have increased significantly, and they are right next to the coast, right? And so in terms of incentivizing, I don't see that happening. Having said that, I kind of agree with both the comments here that the governments can play a significant role, and I think it comes back to my earlier point about the vulnerability. We really need to focus on the vulnerability of our communities. And the building codes and the land use zones have to be really defined well. And it's also a long-term view. It's not about a snapshot view. It's not like we have defined the building codes for the next 50 years. No, it's only the information that we have about the weather and the topic that we have today. If there are more 100-year events happening, are we basing our building codes on that? Then it is only for the next 5 to 10 years, or maybe less, or maybe more. But we need to revisit that one every time and making sure that these are enforced. I think it's an unbelievable that we actually have. It's a really great thing that these local communities are empowered to manage their own risk. And I think that needs to be used by these communities so that the vulnerabilities can be addressed. And again, it reduces the impact of these disasters after the impact in terms of the resiliency of these communities after the event, but also the insurability and so on.
Dieter, one of the questions that's up here is that when do you rule out PPPs as a solution?
Well, that's a good question. I think to the extent that private sector solutions are able to fill the gaps we perceive as protection gaps, I think these solutions should be preferred. We just have to recognize that in certain cases, losses or the magnitude of the losses can be very high. There is a potential that certain losses can turn into systemic risk. And at those instances, maybe private sector solutions on their own are not sufficient. And that's, I think, the point in time when you need to think about whether you want a PPP and whether a PPP could be part of the solution. And natural catastrophe losses are a good example. As I said, we also have a PPP for terrorism losses. That's another example. And a recent discussion that you see popping up is on cyber risk losses and whether PPPs need to be present in that discussion as well. I don't have a fixed answer for that, but it's these type of high magnitude, potentially systemic losses that are, I would say, open to PPP solutions.
I think it's when the insurance companies aren't going to be part of the solution, then we have a room full of regulators who have to say, okay, we're going to step up as government and do it ourselves and actually force the market to change in the ways that we need to do to protect our communities.
Yeah, I mean, I personally think that P3s are definitely possible, but the question, it's again a partnership. And if that partnership is not there in terms of listening both sides, it's a two-way street. I think that's really the core of a public-private partnership. So I'll go back and repeat myself saying, if we do not have a risk mitigation in place or a plan in place, then a risk transfer cannot be the only solution from a public-private partnership.
And when you're looking at that, one of the questions is that what goals for the public-private partnerships do you have, at least for Munich Re?
Yeah, I mean, I think from the focus that I've had in the last 2 to 3 years, it is really the goal is for us to understand how can we bridge that gap between the view of risk that we have versus what the communities have, right? I mean, that has to be bridged too. And that's really critical because we have done at least a handful of reports, and the one which I mentioned about on the Missouri River, that was, I would say, the first ever white paper that quantified the benefits of risk mitigation, but not just as a study, but also reported on the actual premiums and how does that premium number at the property level will come down, right? So I don't think any other paper has done that. So, and coming from an insurance company, right? So I really think that, again, back to the goals, I would say the focus is really on how do we manage the risk and how do we collaborate with these communities so that we are able to communicate, this is our view and this is how the impact would be.
Any final thoughts? Because I'm going to get the hook in a minute. Amy?
Well, I guess I'd say I want to work with you all. I don't know what that means, but let's create a public-private partnership. In this case, we're the private entity. We actually work with all different types of government and the private sector on many of the research projects that we do. And part of it is just getting access to data. And when we're able to see the data, we can create communication materials and arguments that help us all.
Dieter, you close us out.
Yeah, maybe one thing which I haven't mentioned so far is natural catastrophes, of course, do not stop at the border of the countries. So the same floods in 2021, the same heavy rainfall, that causes the floods in the southern part of Belgium also caused severe floods in the southern western part of Germany. So this brings also us to a discussion where next to national solutions, because we have mainly discussed about national or local solutions, there may be a international or supranational layer to this problem and a discussion to be had, for instance, in Europe on EU level. And I know EIOPA and ECB have also already been looking into that issue. The challenge being, of course, that the national systems are so widely different or even non-existing that adding this European layer would also be an extremely huge challenge, even much more complicated than solving it on national level. But I think it's a discussion we need to have.
Thank you, and thank all of you. Please join me in thanking our panelists.